Let's put market structure into practice. I'm going to show you in this video on how we approach market structure from a top-down analysis. This is super important for us because we just don't want to focus only on one single time frame. We would like to use all time frames that we got. Okay, we would like to build up our story by understanding what market is doing on all these time frames, because an institution or all the other participants of the market, they will not just act on one time frame, they will all act on all time frames. And this is why we are doing the same. We're analyzing everything from a higher time frame perspective, and we just go down lower to the lower ones. Now, I would just start right now on showing you the concept itself on how it looks like here on the 1 minute on the Euro USD chart. And afterwards, we will make then an example on the higher time frames as well. Okay, so just to show you right now on how we should view this. And here, guys, you can see from the start what price did is breaking here something strong, right? Why do I say strong? Well, it is something more significant. It's a higher time frame structure in this case, because you can see price went down and then went up, right? So that means for us, we just identify the high and lows, okay? More we don't need to do. So we see here a high get broken. So at this point, you say, okay, you got a higher high. If you just view right now this context, and the point when price came here, it broke it and it is back bearish, okay? Now, this in this case could be right now easy the M5 or the M15 structure, what we just mapped out, and we can now go here on the lower time frames and identify structure here as well. So for instance, what price did is after it broke this high, getting a higher high, what you can expect is price to give you a pullback, for instance. And in this case, that would be pretty easy to understand. You see here, break of structure. It starts here. So this is your original move. You see price moving down, giving you an up move. Then again, at this point, it's stopping, going down lower, and it's breaking from this point, the structure, and it's moving more to the downside. And the same thing, creating again a lower high, and here everything got broken, same here, and then got broken one more time. So this is structure, right? So you got the higher time frame structure here already, which is this, right? Okay. And you got internal structures. Now, what you could do, of course, is you say, yeah, but I got here something as well. I got this small form of structure as well. That's what you could include as well. But look at this. This is the point where this concept will totally fail, because you would just get so much information which is at the end not relevant for us, because you cannot just say right now, okay, here it got broken, price is moving down. So from this point, you can go short, for instance, okay? But then here price is breaking back up. So is it now back bullish? Not really, because you can see clearly it broke this major structure from here. So just try to identify the origin of the movement, right? So you got here this, okay, really the break, move up, and you do not care about what price is doing here internally again, because that will be then just an individual trend on the lower time frame, okay? And this is what we need then to top down. But you can see just right now on the M1 on how much details you have. So what I would focus on is just to understand what price is really trying to give us, because this concept is super powerful if you can really use it. But if you just try to identify everything which could be a break of structure, everything will start confusing you, right? Because you could say right now in this case, yeah, but what if this is my break of structure? What if this is my break of structure? What if this is my break of structure, right? So all these things just do not make sense, because it it is not relevant for us. For us, relevant is just to see this. What I just mapped out right now, this is the only structure which is really important for us. And now let me bring you the next point. We do not use market structure to understand if price will shift or not. Okay, so what we use market structure is just to identify these breaks. Okay, so we identify these breaks, we identify on how price is developing, and then in the combination with all the other concepts, we will be then able to say, okay, maybe it will go bullish, maybe it will go bearish. That's it, So this is all you need on your charts from a market structure perspective. And now I would say, let's just clean everything up. Let's just move on a higher time frame. Let's just start with the monthly, and we'll just work our way down to the low ones. Okay. Now, for instance, if I see right now here the monthly, I mean, it's bearish, right? And that's what I've said in the practice example. I've said to you guys that you should follow, right, the bearish trend. And look at this. Everything here is bearish. So you can see here pretty clear. You broke this, okay? We broke this, okay? Then here internally, price is moving with break of structures and so on. Right now, here is where we are. Okay, so price, you can see here how you could map out structures. So also the highs, not only the breaks. So from higher high to higher low, so the ranges where price is moving. Starting, of course, with this move here, but also this here is some point. So we just mapped out right now here in this case, there are higher highs, higher lows, and so on, or lower lows and lower highs. So here you can see this is where price made this break, but at the same time respecting here this, okay? So when going up higher, here, quick ranging market, and then starting to make a move, and from here it got the break, move on, break, move on, major break, right? Because we really broke something here, and price just continued to go down lower and lower. So that's what we can just see right now from the monthly. So monthly is in general not telling us too much information right now. We just see, okay, it's bearish. So we just move on right now on the weekly. And you can see how if you identify the highs and lows on the weekly, they are still relevant for us because we really mapped out the points that are relevant for the overall structure. Okay, so you can see this is where price forms structure. So they are always just highs and lows, nothing more. But now here on the weekly, things will get more interesting because you start seeing how price developed these trends. Okay, the trends that we want to follow. We want to go with these trends. We want to see, okay, as soon as price broke something, at some point after we broke it, it will give us a pullback. And that means for us, yes, we can go long. And that also means, yeah, and at some point we can go then short. So that's all what we want to see on market structure. So we have right now everything here on the weekly. Let's move on the daily time frame. Here on the daily time frame, you can see all the lines are all relevant. They still remain the same. We can just add even more structure breaks to it. So for instance, if I see this, you can see clearly price broke your structure, right? Okay, after it made this BOS to the downside, you can see from here it started to move on. What you could say right now here as well is, yeah, but also here we broke something and then we made this break. And you can see may break, even two breaks, then pull back, and then we move on, another break here, moving down, another break here, and then because this market is bearish, it will start moving down. Okay, here another break, which means, okay, it's again time for price to give us some form of pullback. So let me just map out here everything that it makes sense to you. So here break, and And where are the higher lows? Well, here it is, here it is, here it is. So this is why I personally like to use colors, because this is where I can see clearly where the pullbacks happen, because you can see right now price creating this bearish red candle, afterwards bullish candle. So I know, okay, this is exactly where it started, right? So this is what we need. Then here, in this case, a doji, that's where price also, because that is the bearish movement. Price move up, bearish movement. And then this one leaded to the break of structure. Okay, so everything cool. Here the same thing. What we see here is break to the upside. This is from where it started. And then here you can see how the pullback failed, right? Because this was then the new higher high in this consolidation. Then from there, price went down and it broke, in this case, this here got broken. Give you another from here, push up, push down, another break, and then again the break up in order to come here up higher, then again break from here, and so on. So you can see you can add here thousands of lines if you want. Also here, for instance, you got a break. Okay, then we just move on and so on, right? So we just go here. You can see right now how all these lines do make a lot of sense the more you go to the lower time frames to see. And I just started right now with the monthly, weekly, daily, 4 hour, then I go to the 1 hour, then I go straight to M30 or M15, then M5, M1, and the seconds are not really relevant right now for me for the structure. It's more than likely than relevant for the entries itself. Now, what do I have here? So many time frames. Well, sometimes I just don't see what I want to see on the major time frames that I use. So this is where I'm just trying then to go on the lower ones to try to identify something. So back to these things here. You can see clearly this is the break, move up, but here it's still in this structure point. So here just move down, move up, move down, move up, move down, and so on, right? So you can see pretty clear. See what structure is in reality telling us, right? Is here, for instance, the lower your time frame is, the lower time frames will of course always start giving you the first indication that you got your break. So what we can see here reflected is pretty simple. This here, price moving crazy down, right? Then moving up, moving down, breaking structure, going down, moving up, moving down, moving up. So the bullish trend, as you can see, it's sustained for a while. Then it's the first time price moving down below this, moving up higher, making here some form of consolidation, and then it's failing here to break this, and it starts to move down, making here a break and continuing with the bearish trend, right? Then again, break of structure, respecting bullish, moving up, and so on. So this is exactly what I just mapped out right now, is this till this up move. This is all I just reflected here. And I will show you why market structure is relevant for us. You can see here, right, the first break. So here is the breakdown, break up. At that point when price did, you've been in this bullish range. So the concept of market structure is telling you, hey, yes, we are overall bearish for sure, because we're pushing down. Higher time frames, everything is telling us we are bearish. But because of somebody managed to bring the price back up, a big institution order who activated it and brought price that much to the upside, was then responsible to make this break here, which means, hey, maybe his intention is to bring price somewhere higher, so to make a pullback. And that's exactly what price is doing. This is why exactly market structure will work. So you can see it's even creating higher highs. So for you, ideally, of course, you will look for something here, your POY to set up there, and you are trading it then with a nice long. Here, another long. Maybe you will find here some opportunities to look here for another long. And then at some point, of course, this whole ID will be get invalid because something to the left will tell you, hey, we may go down lower now. We have right now the possibility that price will go down. And this is exactly where here market structure will help you to clarify this ID by telling you, hey, we got a break of structure, which means, okay, maybe we should look here for a short, okay? So we will go then over supply and demand zones because this is how we will then identify our POIs at the end. But you can see clearly, okay, this is what price is doing. Then it's really moving crazy down, making another break of structure here, okay? Then probably you will have here another POI to look for a short, breaking structure one more time, maybe another POI for you, then breaking it even once again. And this is where you then should again look. Do you see something here which makes it relevant? The price maybe will go back up higher, but this is where we will not use market structure to identify this, okay? But now, again, let's say at these points, okay? So this is shift and momentum. You got here again, shift and momentum. Maybe we will understand why, maybe not, okay, depending on what the overall situation is at that point, if it is even attractive for us to look here for some sort of entries or not. And then we will start understanding, okay, again, break of structure bullish. Hey, I got a POI right here where I could look for a long. Another break, another POI, and again, another break. And then here, if we will continue with this example, we will see, okay, here we got another shift. So what price is doing is just moving again down, making here another breaks. And moving down. So in this case, this time frame will not tell us that this here is like the break of structure, right? Because the next break of structure will be only here. So you will have in this case like a bigger range. So this is already something which makes it more difficult, but also here we can have easily on POI where price then can just continue to drop down from, okay? In this case, you just have like a major range because price made this one, right? So you're looking, okay, price went down, will continue to go bearish. So let's look if the POI is valid or not. And then we will take shorts or we will not take them, okay? So this is exactly on how we can put this into practice, okay? So this is how we use the market structure concept itself. So here, one more time, pretty nice. This is right now, just in this case, only the monthly till working down till the 4 hours. And now, of course, what you can do is you just go even lower. You go now to the 1 hours, okay? On a 1 hour, you will get then even more information for everything, right? So you will have even more breaks on this concept. You can then look for even more POIs to get involved in. So you will see there are a ton of them. And this is why we will not take every single break, right? What we see. Important for us are, of course, as you can see, the higher time frame ones, because these are the ones which will tell us the same where the direction is, where price is going. And yeah, so 1 hour, you can see here a lot of individual trends again, because here got to move up, move down, boom, pull back, move up and down, and so on. Okay, so you have just too much trends. This is why we don't need to look or to analyze every form of market structure, because important is just to see how everything will be then in a line with everything. Okay, so for instance, if we go then to the latest example that we just mapped out here, because we mapped out here everything pretty detailed. Let's just go make this last example. So you can see here again, price made break of structures to the downside. 1 hour, you can see here the first time it went here at something, broke something, okay, and then it started to drop down. Okay, so it really gives you like here the break, pull back, and then it's moving back down. Okay, same here, moving down, bearish momentum, giving you pullback, moving down. So where are your structure breaks? Here, the same from here till here. This is your high. Then again, here breaking this. A lot of internal traffic, of course. So this is why personally I would not just map out always everything, right? Because for instance, you could say, yeah, this is a break, right? So we're now bullish. Or I don't know, you can see here like thousands of examples on how here you're going down, but here again, you break it back up, right? But still, it continued to go down, down, then here again, down, and then up, and so on, right? So it's just breaking it after it breaks. So what you can see, and this is what I explained you in the theory at the beginning, is you could just say, yeah, but why do I not just map out everything like this? Here, quick consolidation, but still going higher, right? Boom. Then here this. Then we go down. Okay? So this is how structure at the end looks like, because what you need to identify are just these points. Okay, market structure, like I said, will give you like thousands of break of structures the whole time. You can see that. You can just look through it and you will see, yeah, you have like every single minute a new break of structure. Okay, if you would just react on every single break of structure, that would be stupid, because it will not give you this. This is the market structure. Why? Because what I do is, here you can clearly see, I'm just using the high and the lows, right? So one more time, low, high, low, high, low, high, low, high, low, high, right? So higher high, higher low, higher high, higher low. In this case, not a higher high, but internally higher high, right? Higher low, higher high, higher than this one, right? And then overall new higher high. So this is like in this case, if you then go down to the lower time frames, you will see here again a new individual trend. So we go right now to M15, right? You will see here the same thing. You see an uptrend, pullback, uptrend, pullback, uptrend, right? And this whole thing is then in this case, because here you got your break, and then this is where price is moving. Okay. Now you got M15, you see thousands of things. So what we just want to know is the red lines at the end specifically. We just want to see, okay, where are we? And that's it. Now you know actually how we use market structure. So we just map out the things that we have. You can see here, you can use your structure to like still validate your direction and where you are. I will show you then, of course, afterwards on how we will put it then together. Right now in this video, we just go over on how we view it, okay, how we map it out. But for me, very important is always when I use breakup structures, when I use structure itself, is just like I said, we go to the higher time frame, we understand, okay, we are bearish, right? We can see on the weekly pretty nice how price is moving. And then the more we go into the lower time frames, you will see then we will start using all the other concepts in combination. And then I will show you then how we use. So if you're right now probably a little bit confused because you say, okay, but how do we use that market structure? I cannot tell it to you right now. Why? Because we need the other concepts which will support the structure, or it will not support structure. That will be then relevant for us. Okay. So right now, guys, what you can do, go on your charts and try to map out all these individual structures. You can then also see, like, what I want to go over as well is, if you go now M15 right here at the top, for instance, just to show you that, you can see, let me just delete this, that it looks cleaner to you. So price is going higher until it got broken here, and here it's still respecting it, right? So from here, price moved down, taking out this movement, which was responsible to take out this. Then from here, it's moving one more up to make the pullback, okay? Because right now at this point, you need to understand, price is starting to go bearish because you broke this. So now he wants to go bearish, so he needs to make a pullback and then go crazy down. Okay, now here at this top, what we can use is we go on the M5. Okay, we go on the M5 and we see here the same kind of things. Still same structure, so let's just go straight to M1 to see if the M1 gives us more information about that. So M1, same thing actually in reality. So you just will see that M1 started faster with this, right? Because from here, price moved up, and then you can see here internally it broke this. Now, it is stupid to say, yeah, now we will look here straight for bearish because overall we're still bullish. But the moment when price got broken here, you can look here and see, oh yeah, but now we start breaking this. So we're right now bearish. And then you can see how it's developing internal right now here, right? This bearish form of structure. You see it would just follow it, okay? Until it will come back to a point where it's time for the pullback, and then it will continue to go down lower. Okay, so price will then respect this, breaking this, breaking this. Okay, so I hope you got the point. Problem is then just, whenever price will hit a POI where it's time for a pullback, it will destroy all the structure and then it will go down lower. But more of that in the next following video. So right now, guys, if you have absolutely no experience with market structure, I highly recommend you now going on the charts and just mapping out these highs and lows. Try to understand how they play with each together. And that's basically it.